Hello, I'm excited to have you here. Welcome. So I am Astrid Haurissa. I am a MBA student of September 2022 in IPMI International Business School, Jakarta. So here I will be sharing a mind map of corporate finance class. Corporate finance is a subject that we learn in MBA course in IPMI, where we were facilitated by Professor Senior Roy Sembel, MBA, PhD, CSA, CIB. He is Professor Distinguished Chair for Finance and Investment in IPMI. I will start with mind map itself. So mind map is a way to represent information in form of diagram where you emphasize in interconnection between data and also associate the data with images or visualizations. Mind map itself was popularized by Tony Buzan. He wrote a book about it back then, and I happen to have read the book Mind Mapping by Tony Buzan back in my junior high school. So I'm pretty excited for this exercise because I did it back then when back in junior high school, and it was much fun. So let's get to it. As you can see here, my mind map for this course is handwritten or hand-drawn. The reason why I choose handwritten is because one, I think it's more interesting to look at, and two, I think it's more fun to do because you got to draw it with your hand, right? And I haven't drawn for quite some time. I just remember back then, I've told you back then I did it in junior high and I think it was fun. So when the exercise comes, I think, well, it must be fun too. So here it is. All right, so I will start to elaborate more with this mind map. I'll start here, the corporate finance class. What is the objective of corporate finance? So the objective is to maximize the value to shareholder. What is value? Value is what we measure with growth, return of invested capital, and cash flow. So when we say we want to increase value, what we want to increase is basically this. We want to see the growth in the company, the ROIC growth, and the cash flow increase. And cash flow itself, I draw a picture here. It's a blood drops. Cash flow is the blood of a company. It also implies that every company should have a healthy amount of cash flow, and the cash flow statement is very important for a company. And that's why the dividend policy is actually signaling that the cash flow is really there, or the money is there, or the blood is there. Now we move down here. How we can maximize the value to shareholders. Here I have 4 points here. I will start at the very right here. We can maximize the value to shareholder by reducing the risk of fraud. So here, this is a thief. This is a burglar. There's a triangle of fraud where it says that people tend to do fraud when there is either one of this aspect or the accumulation of these three elements: opportunity, pressure or motivation, and rationalization. So it is important for a company to do things to minimize these three elements. Now we move to point number 2 on how to maximize value shareholder. It is talking about making the best investment decision. It talks simply about the capital budgeting, where the base of capital budgeting is the time value of money. The image here is saying that money in 2023 is worth more than money in year 2053. So money in the present time is worth a lot more than money in the future. That's the concept of the time value of money. And from there, we got some criteria NPV, PI, and IRR. We use this NPV, PI, IRR to take the best investing decision. Basically, you want to invest to choose investment that will bring the best return for you and the shareholder, of course. Now we move to number 3. How to maximize the shareholder value? It's by doing the good corporate governance. It's simply by doing the best management or implement best management in the corporations. By doing so, it is automatically, you see this, there's a dotted line. It will lower the risk of fraud by doing the good corporate governance. Besides that, the good corporate governance will also reduce the principal agent problem, where it says that there is always a conflict of interest between the principal and agency, between the person who owns the company or the shareholders and the people who runs the company. So good corporate governance is one way to reduce the problem. Now we move to number 4. We see here the color orange. To maximize the value of a corporation to shareholder, it can be done by capital structuring. The base is to understand that debt is cheaper than equity to a certain extent. It is described in this graph of value of a firm versus the debt ratio. So the debt will increase the value of firm until certain extent, and then it will go low. So it says that there is an optimal debt ratio, and the company should find the optimal debt ratio. It will be different for each company. It will be different for each industry. So it is important for company to be able to spot this. And here we see here, if we overuse the debt ratio, if it's too much, the company will have financial distress, and it will make shareholder will not believe in you. You will not believe that you can pay back the debt. So the value of your firm will go down. That's why you have to find the optimal debt ratio. The implementation of capital structuring in real life will be the corporate capital restructuring, leverage buyout, and such. Now I will move to the left side, or this green line. The corporate finance also talks about investment strategy. Investment strategy, here I draw a basket which has eggs inside it. So it says basically, don't put your eggs in one basket. The investment strategy consists of active and passive. For the active one, basically it is talking about you buy when the stock is low and sell it when high. So buy low and sell high. To determine when is the right time to buy, we can go with fundamental analysis and technical analysis. When we talk about fundamental analysis, we were talking about the financial ratio and intrinsic value of the company. And here I put a note about conglomerate discount. So it's basically saying that when one big company is measured, the value can be lower than if the company is divided to several subsidiaries. So that's conglomerate discount. And for technical analysis down here, it basically focuses on market and data trend, historical trend. Here I put the note of some tools related to technical analysis, such as beta, Williams-Sharpe ratio, WACC, and CAPM. So those two are talking about active investing. Now for passive investing, here I draw a person who's sleeping. I think it's a guy. Yeah, so he simply just sleeps. So he buys and then he sleeps. He doesn't he doesn't actively buy low, sell high. He just go with the flow, go with the market. So for passive investing, there's a theory that support this. It is the efficient market theory. It is patented by Eugene, or one of the person who proposed the theory was Eugene Fama, our great-great-great-grandfather. So here, in efficient market theory, it says that the share price already reflects all information about the company. So you cannot beat the market. You cannot expect to gain profit or to gain return by trying to beat the market. It says that it's better to just go with the flow, go with the market, or basically diversifying your portfolio, or simply buy the index fund. So that's it. I have gone through all of this. Well, for me personally, I think overall I really enjoyed the class, and I myself personally really enjoy and intrigued with the investment strategy, because before I joined the class, I tried to purchase and sell stocks to gain returns, but I haven't gotten the information or the knowledge on proper knowledge on fundamental and technical analysis, and I haven't heard about the efficient market theory. Now that I learned, I think in the future I will make a better or more robust informed decision in my investment strategy. And besides that, I think the interesting things in this class is when we learn about the real life implication of corporate finance. For example, like I mentioned, the leverage buyout, the subprime mortgage, or the housing bubble in US, the hostile takeover. That's really interesting because I get to understand more what is the implication of corporate finance in real life. So we come to the end of this video. So before I close, as you see here, this is the picture of us, the MBA, Executive MBA, September 2022, IPMI Jakarta. This is us, and this is Pak Roy Sembel, our professor. It's very nice to be in this class, and you should know that our professor likes to tell jokes in class, which is very engaging for us, so keep on doing that, Pak. Alright, I think that's all for this video. I'm so happy that you stick until the end of the video. Thank you for watching, and see you in another time. Goodbye!